This is the Harness Money Report, a show designed to help anyone become a better investor. Every week, your host will break down a stock from beginning to end, the management, products, revenue, future, and so much more, all leading to the final stock verdict. Are you a bull or are you a bear? This show is for information and education only. Please do your own research before making any financial decisions. Thank you for being here, and now here is your host, Colin. Hello, and welcome to the Harness Money Report. My name is Colin, and I have an incredible show planned for us today. I am going to break down one stock from top to bottom. I'm going to do a full deep dive on whether or not I think this stock is something that I want to invest in or something that I want to avoid like the plague. Every single week on this show, I take one stock and I do a full breakdown, the history, the leaders, the product, the competitors, the stock and the financials, and I determine if I want to own this stock in a growth portfolio, if I would want to own it in my income portfolio. Right now, I am heavily focused on building up dividend slash stock market income. So I want to know, is this a stock that I want to invest into or something that I want to avoid? And today I have a great stock plan for us. It's all about the upcoming summer season. So right now it is just the beginning of the spring and summer season, and this stock fits right in very nicely. So without further ado, let's get into it right now. The stock that I am going to discuss is the Pool Corporation, ticker symbol POOL. And it is just like what it sounds like. It is a retail store all about the outdoor pool space. So your backyard, indoor pools, above ground pools, all different kinds of pools that exist out there. This company really caters towards. And the reason I picked this one was because, yes, it is a retail stock that has stores around the world, but it really focuses primarily on the wholesalers, those industry professionals that are going to service pools, because that's really, I feel like, where the money is. So with consumer products like Apple or maybe like a Walmart, those you really have to scale and have massive distribution. And this company does have wide distribution, but those are really serving end customers. With this company, it's really catering towards the professionals that maybe buy chemicals or buy tools to work on pools or to build new pools. And then it really tries to sell their products to those people in perpetuity. So let's jump right into this. A brief overview. I've already talked about it. They are the world's largest wholesale distributor of swimming pool supplies, equipment, and other related leisure products. So they have branched out into other aspects of the home outdoor space. So I'm thinking patio furniture, umbrellas, things like that. So they operate right now in North America, Europe, and Australia. So another thing that's a plus in my book is that they are operating internationally. They have proven that the pool space doesn't just exist in North America or Canada, that it does have many different countries that they can serve. So that's a much broader population of people that they can cater to. So let's dive into a little bit about the history of this company before we get into the stock financials and the leadership, although they all kind of tie together. So the history of this company was started in 1981. It was originally called the South Central Pool Supply in New Orleans, Louisiana. So interesting that this company came from South. I don't see that many companies on the stock market that were coming out of Louisiana. So that's just an interesting location for it to actually get started. And it was started in 1981, but it was originally called the South Central Pool Supply. But in 1993, that's when it actually became the Pool Corp. So another company merged with this company in order to create the Pool Corp. And of course, they were just located in Louisiana and servicing that surrounding area. But they quickly branched out to other cities in the surrounding area, like Oklahoma City, Jacksonville, Mississippi, Little Rock, Nashville, Houston. the South is kind of a good jumping off ground for a lot of businesses. I think Walmart is the big one that has proven that the South part of the country, if you can make something work there, you can generally scale across. Across the United States, across Canada, Mexico, and then eventually the world. So you kind of have to, because in the South, the southern states like Texas, Oklahoma, Louisiana, Mississippi, a lot of your customers are very spread out. There's a lot of land that people live on versus that's just me saying that it's not densely populated like New York City. With the southern part, there's lots of land so people can have a suburban home and then they can put a pool in their backyard. So uh, that's definitely a big part of this company. And it was in 1993 that the Pool Corporation merged with Cody, Hennessy, and Simmons, another company, and Sexton was named the chairman of the board and the chief executive officer of this company. So it was really Wilson B. Rusty Sexton that was the kind of CEO that really pushed the growth and the rise of this company. So it's just a little bit of the history. They've just slowly expanded over time. When did the company go public? This is something I always want to know. And I always find kind of fascinating about the origin story of how a company goes from being private in order to being public. Now, I kind of have a rule when I particularly invest for myself, and that rule is that I try to stay away from brand new uh, straight to market companies or companies that have just brand new IPO. That's why I want to know, when was the IPO for this company? So we have some really big IPOs coming up this year. So SpaceX is looking like it's going to go public, and then OpenAI looks like it's going to go public, and then probably after that the Anthropic of the world. And I'm assuming eventually after that some other like AI companies are going to try and raise money and go public that way. So I really like to avoid those companies. So, for instance, the big one is SpaceX. Elon Musk is launching SpaceX right now, and they haven't announced that they're going to go public, but it looks very much like that is going to come later on this year. I will not be investing into that that brand new IPO. I'm sure it will have a pop. I'm sure it will do wonderful. They're going to raise a ton of money, but I don't know. I feel like I've just been burned too many times. What usually happens is there's a big spike with an IPO and then it quickly falls. I'm thinking of like Figma in recent years. I'm thinking of Coinbase, that happened with Coinbase, that they have a huge surge and then fall. I just don't like the drama of an IPO. Yes, you can get in early and you can hang on for a very long time, but I feel like if you wait a year out from an IPO, even maybe 2 years out from an IPO, that you're not going to miss the boat. You're not going to miss the boat on a stock if you didn't hit it right when it IPO'd. A lot of times with an IPO, you have the leadership or the employees that are working there when it was private that want to exit. So that's a big time for them to uh, get their stock out there and then sell off the shares that they have in order to cash out and get a big payday for them. So I just like to wait till the dust settles and actually see, is this a good company that's going to grow on its own? Does it have legs? Or is this something that was hyped up really big and it's going to take a long time to launch after it's been IPO'd? So it's a plus that this company went public on October 9th, 1995. So it's been public for many, many years. And they raised $42 million. And it is traded on the NASDAQ stock exchange. I was kind of surprised to see that because NASDAQ is a little bit more tech heavy. But in uh, let's see, in 2006, Manuel Perez, a distribution executive with strong industrial relation skills and vast experience in building successful empires, joined the company as the COO and was eventually named president and CEO. And then this Rusty character stayed on as chairman of the board until 2017. So I like that this Rusty person was still involved in the company as this other Manuel Perez de la Mesa, as he took over as the CEO of this company. And it was really under Manny's leadership that the company grew and expanded abroad. So they have these really large warehouse stores, which is where they store all of their products, and then uh, the customers come in and can buy the product or pick up the product and take it out to their job sites. So in 2018, 20 years of leadership, the Manny retired and Peter D. Arvon, who joined the company, he took over as the CEO of the company, and he is still there today. So in 2020, the company was added to the S&P 500 index, which shocking because that was right during the pandemic, which maybe that was a great time for the pool company. It definitely had a spike in its price because everybody was locked at home and pools were suddenly extremely in demand. And they have today they have over 440 sales centers worldwide and 120,000 wholesale customers. So this is really a beast in the pool equipment, in the pool supply business. Now, there are some different players within this business. They don't actually manufacture the pool equipment like the pool motors or a lot of the products that they have in their stores. They are purely a distributor or a retailer. And so they really are looking to expand their reach. Their moat is going to be in their network of stores and their reliability of getting out the products to the customers and being in proximity to the customers. So it looks like they're slowly opening up new stores every year. So they're not trying to eat the world by opening up 1,000 stores per year. They're not trying to hit as many stores as they possibly can. I think they're more methodically opening these warehouses as they can see where the demand is, where the profitability is going to be for these different locations that they are opening. And another thing I like about this business is that they are focused. When you are a retailer, you're not going to beat Walmart, you're not going to beat Amazon, you're not going to beat Costco. Those companies, those players, they have solidified their position in the marketplace. The way that you are going to compete against the Walmarts of the world is to be very niche specialized. So I like this type of business, a Home Depot, a Floor and Decor. You're going to have a very niche market and you're going to have to dominate. You're going to have a lot of products catering to that specific market and be able to fill that specific need. That's how you really win over the customers for your products. And also pools, pools, it's even though this is a retail business, a lot of their customers are wholesale, and there's a couple different things. There's the actual homes that have these pools. A lot of these pools, I'm sure that they service are going to be for businesses like hotels around the world, resort and hotels, things like that. Those types of businesses, and also construction. If you're building a new house or you're building a new neighborhood, maybe you want 10 of the homes to have pools. In my area that I live in, a lot of people, I live in Texas, and a lot of people have pools. So there's going to be a whole construction element tied into this business where this company is going to want to get those contractors in early when they are building this pool so that they can actually build the pool and then they can service the pool after it has already been made. So it looks like how does this company make money? So we've talked about it. They are a retailer. They sell products. There are three primary distribution networks: SCP Distributors, Superior Pool Products LLC, and Horizon Distributors. And they also have a complete line of commercial and residential irrigation products for sprinklers, power equipment for professional landscape market. So think all of the things that go into doing the landscape, rocks, plants, edging, that type of thing, as well as other outdoor products. So outdoor lighting, outdoor grills, outdoor kitchen components, golf irrigation, and water management tools. So water management tools and products. So they've really kind of diversified away from just servicing pools, just doing the chemicals, the motors, the sweepers, all those different things. So there are who is the target customer for this particular business right here. So there are four principal markets, and we've already talked about a lot of them right here. So, remodelers and builders, independent specialty retail stores, service companies for the pool and hot tub maintenance and repair, and then contractors serving the irrigation and landscape maintenance markets. So, they're really looking at professionals. They're not looking at the end homeowner that's going to go buy that's going to do it themselves. They want those professionals that are going to be maintaining not just one pool, but a whole network of pools and outdoor systems uh, in uh, in their customer base. So it's a really very specific type of customer. The number of employees, not a massive number of employees, only 6,000 employees worldwide. So I would have thought that that would have been a larger number, considering they are in over 40 countries globally. That was shocking too. 40 countries, that's a good number of countries. So that is a lot of different businesses. That proves that there is a large worldwide market for their products and that there is still room to expand. I'm sure a lot of these countries are established, like the United States, are first world countries, but I'm sure a lot of them are up and coming, younger countries like Mexico. Uh, Maybe some of the southeastern Asian countries are on the rise, and as they get more money, they're going to want to have pools, they're going to want to install pools, and they're going to need to be maintained. That's another probably benefit to this business is a pool is not something that you just set and forget and it just runs perfectly uh, as you have it, like a computer. You don't just sit it on your desk and it just runs and works the way it should forever. No, you really have to maintain a pool. You have to maintain the motor, the equipment. Sometimes the equipment is outside. Sometimes it's humid wherever the pool is. They need chemicals. Sometimes they have to be resurfaced. There's a lot of work that goes into maintaining a nice quality pool. So that's recurring revenue. That is recurring revenue for this business. Now let's talk about the products and service. Products and services. So we already talked about that they serve wholesale customers. So number one is equipment. So pumps, filters, heaters, chlorinators, saltwater systems, pool covers, pool cleaners. They do all the chemicals. So chlorine, bromide, algicide, pH balance, alkalinity, and on and on. Supplies, pool toys, floats, noodles, games, pool cleaning supplies, maintenance, and then water irrigation products and outdoor living products. So we already kind of talked about that: patio furniture, grills, fire pits, etc. So that's pretty much everything that is related to pool servicing and pool products this company sells. Acquisitions. I always like to know, that's another one I've added to my reports, to my research, is this company a serial acquirer? Have they grown organically, or are they just gobbling up as many companies as they can? And then how much are they spending on their acquisitions? If they're spending a lot of money like Salesforce does on acquisitions, I want to know that, because that's going to affect you, the shareholder of this business. So what I could find is just all the way back to 2017, they did the acquisition of Pool Supplies Canada. So that helped them get a bigger foothold in the Canadian market. 2018, they acquired a business called Pool Warehouse. And in 2019, they acquired a business called Pool Supplies USA. So really, a lot of times with retail, we're just looking at consolidation. They're really trying to, I'm sure they made these acquisitions purely just to not branch out into other business lines or tack on other businesses, but they really wanted to gain market share. They're looking to really be the leader in the pool space and gain as much market share as they possibly could. So it looks like these businesses were acquired just to fit into their current model and just to expand their existing footprint, rather than maybe trying to edge out a competitor, rather than trying to buy. They weren't buying some intellectual property or some talent that they needed. No, it was purely just to expand their footprint, it looks like. So right now, the chief executive is Peter D. Arvon, who became CEO in 2019. So the CEO's background is, prior to joining the company, Arvan served as Chief Executive Officer of Roofing Supply Group from 2013 to 2015. and as president of SABIC Polymers, former GE's Plastics, until 2013. So he really has a background in the business, the construction business space. It looks like so roofing supplies, plastics and polymers. That's very much in the construction and the industrial side of the world, uh, which definitely relates into pools and the pool dynamics. I feel like this is a business you could learn. It's not something like it's not rocket science. It's not rocket labs or a a Boeing. It's not some type of business that you really have to kind of grow up in and be there for a long, long time. I'm sure that there are many people that could learn their business model and that could get up to speed and run this company if need be, just because of the type of business that it is. I'm sure there are lots of complexities. That's not to say that that it would be an easy job uh, that anybody could take this over, but I just think that it's something that someone could learn that's not as complicated as a rocket lab or some other type of very complex business that you need engineering or computer science in it. So I also, next, let's talk about the compensation, CEO compensation. So not huge, not a massive amount of compensation, which is what I like. I don't like to see massive stock options, especially if you're a founder of a business and you're giving yourself a lot of stock options. It's like, why? Why are you doing that? So in 2023, the compensation was $2.5 million in cash and $3.5 million in equity. So I'm not opposed to a company giving a CEO or giving the management team equity in a business every year. It definitely gives incentive to stick around. That means they're an owner of the shares, so they want to do right by their shareholders because that directly benefits them. I just don't want to see an egregious amount. I don't want to see them giving equity shares to a CEO and then have that ballooning the the share the share count. If anything, I like businesses where the share count decreases. Those cannibalizers, those share buyback companies like AutoZone and NVR, and the defense contractors they often have a buyback program, and they're just consistently buying back shares, which means that your equity in the business is going up as they are buying back shares. So if a company continues to really increase their share count year over year over year, mm, it's not as appealing to me. And software companies were totally, totally into this. They issued a lot of shares. They kept raising money. They felt like they needed to do that in order to get and retain talent, but it hasn't worked out so great for them now that AI is taking over and eating the world. So um, I don't know. You have to be very careful. It's very careful to watch the share count. That definitely tells a story. So total compensation for the CEO was 6,100,000. So nothing crazy. Uh, Nothing that I'm seeing that's a big major red flag on here. So they have a good number of board of directors. Let's see. They have, as far as I can tell, they have 8 people on the board. So not a massive board either. That's also another red flag is if you see a lot of people on the board, like 13 or 15 people on the board of directors, I'm thinking, okay, why do you have so many people on this board of directors? Because those people are all compensated, and it's like, are they really providing? Unless it's a drug manufacturer, and even then I'm kind of questioning it. But if it's in the medical space, like maybe if you need some specialized talent like doctors or pharmacists that are providing some type of industry insight, I'm like, okay. But most of the times I like to see smaller boards. I don't want to see 1,000 people uh, fighting it over for the direction of the business. So the industry is the consumer discretionary section of the marketplace. Let's talk about competition. It's important when you look at a stock to know who is the competition. It's like an airline. If you're looking at the airline industry, it's an extremely hard business because there is so much competition in that space. You're going to want to know who the players are. And honestly, I want less. I want if it's a sector that has less competition, that means you can find some really good winners in in that space. But you have to be really careful about which companies that you select. The telecom industry doesn't have a lot of competition anymore because they've all been consolidated into a few massive players, but it's still not a great sector, in my opinion, to put your money into. So direct competition for this business is Leslie's Pool Supplies, which is also, it's kind of direct and indirect. Yes, Leslie's Pool, they do everything pool related, but it's more on the consumer side. I feel like less on the wholesale side. There's another retailer called In the Swim, and then there's another one called Pool Warehouse, which we already talked about. Pentair and Hayward. So Pentair and Hayward are the two product manufacturers for pool equipment. So pool motors and all the things that go along with that. So you could buy directly from those two players and go around this Pool Corp, but there's other things that you need that Pentair and Hayward are not going to supply. So um, while they are competition, it's not exactly direct competition as far as everything that you can get from. If you go to that supplier, you can get some of the things, but not all of the things. So the indirect, let's talk about the indirect competition. So, and that's going to really be the national retailers. So, Home Depot, Walmart, Amazon, Target. Some of those players have private label pool equipment, supplies, local pool stores. That's probably the biggest of them all. I would say is there's a lot of independent pool stores that exist out there and that are going to compete with this business. Is that if you know your local person, your local store owner, and you form a relationship with that person, then you're probably going to go back there and shop at that one just because you want to have loyalty to those people. And then the last one I put on here is foreign suppliers, Chinese product suppliers. So there's a lot of products that are made overseas that I'm sure you could go online to different websites and buy for your pool that are maybe off brand or just a new brand or an unknown brand that are going to compete with pool. So I would say the moat. What is the moat of Pool Corp? And I would say it's really their global network of sales and established business connections. So a lot of times for retailers like a Walmart and Amazon, it is having a physical presence in different locations and then the supply chain. So they have formed relationships not only with Pentair and Hayward, the suppliers of the products, but also those wholesale buyers of the products. So they have a very strong supply chain. They know who to go to get their products. They should have it dialed in as far as supply chain, how much inventory they need to keep on hand at different places, and that you can trust that they have done this for other people, that they're going to be able to do what they do for you. So it's really just in that business network. It's kind of like the mode of Coca-Cola. Number one is that they do great marketing. You know Coca-Cola. It's very synonymous with that bright red logo and whatnot. But it's really their network. You know, you're going to get the same Coca-Cola if you're in Louisiana, as New Orleans, Louisiana, or if you go to New Delhi, India. It's going to be the same, and they have a network across the globe. So I'm kind of looking at it, this Pool Corp, as the same. You're going to have a store in Louisiana. They might have one in England. They have one in Australia. Probably the same in Japan. And so that is a really strong network. Once you have that established, it takes a lot of money to create a new Amazon or to create a new Walmart. And so they also have they carry a lot of products. They have these big warehouse stores. That's another piece of the puzzle, because again, you have to have a lot of money to stock a warehouse store full of different kinds of pool products. So they have the connections with the customers, but also all the different suppliers that supply all the different products for that stores. And you've kind of seen they've been able to branch out into adjacent areas like we talked about, like golf course irrigation or water management, so sprinkler management for homes, landscaping, different things like that that are related to pools, but kind of adjacent to pools. So, what about the future growth opportunities? More sales centers in the United States and internationally. They could expand their product line. They could go to more outdoor furniture, maybe outdoor kitchens, maybe indoor kitchen products, maybe go into different plants, plant nurseries, etc. So just expanding the different kinds of products that they offer and really just expanding their retail presence more and more and more. I would think for how many 400 stores having 6,000 employees, um, that's not horrible. I could see that being 6,000 employees. It's not that much for a retail. Retail is usually heavy. You got to have a lot of employees, lower paid employees at retail establishments. So I'm surprised it's so low. All right, now let's get into the really good stuff. Let's talk about the stock, the meat of this organization. So let's start with the ownership. So who controls this business? The majority of voting shares are owned by institutional investors like Vanguard, like the Vanguard Group. It says insiders own about 4% of this business. So that's not that surprising to me. The largest insider shareholder is Manuel J. Perez de la Mesa with 915,000 shares, equal to 2.4% of this business. So because it's been on the market since 1995, I can understand, and it's changed leaders over the years. I can understand that it's more owned by the institutions rather than the insiders of the business. I feel like the longer a business stays on the open market, in the open public market, that the more it becomes just owned by institutions. So basically, they're owned by Vanguard, which is then owned by all employees that are putting money into their retirement accounts, and Vanguard is allocating percentage into this stock. So it's really owned by the people in the big banks, the large banks. So in 2023, the total shares outstanding was 354,000 shares. So 38,300,000 shares. Let's just say that. And what I do like about it, every single year, the share count is decreasing. So they do have a share buyback program, which means that every single year, your ownership is going up. And usually what also happens when people buy back shares is the earnings per share steadily increases over time. So it looks better and better over time as they buy more shares. So talked about institution is 96%. And number of institutions holding shares is 1,032, which is, gosh, that's a lot of institutions. That's a lot of banks holding a lot of stocks. It's all the top people that you would think. So the top funds holding the stock, the Vanguard Total Stock Market Index, Vanguard 500, Eaton Vance, Atlantic Capital, Touchstone Funds, Fidelity 500 index funds. So a lot of index funds are holding it. Stockholders, Vanguard, BlackRock, State Street, JP Morgan Chase, Morgan Stanley, they are all holding the shares of this business. Top insiders, we talked about that. Manuel Perez de la Mesa, Peter D. Arvon, Kenneth G. St. Romain. So a lot of people that are involved in this business or that have been on the board of this business they're owning shares in this business. So does the business pay employees in stock options or RSUs? Yes, they do. This business does give the leadership and the employees stock in this business if they work there, the longer they work there. So valuation for this business, it's come down since 2020. Again, there was a really big spike in 2020 as everybody went home because of the pandemic and really wanted a pool. So today it is listed at about 8,600,000,000. So 8.6 billion. The share price is 242 per share. The all-time high was November in 2021 at 577. So it's been cut in half since its high in 2021, but the all-time low stock price was $2.78 in 1999. So it has gone way up since 1999. So that just goes to the power of showing holding businesses for years, if not decades, can really have amazing results for stockholders, for shareholders or investors. So that's kind of another lesson, is that some of the best returns from $2 and how much, $2.78 to $242 a share. And that's it. This is even a lesser known business. So this isn't one that's going to be hot on people's radar. It's just going to slowly perform over time. If you hold on to this business, the business expands its network, they do share buybacks and all these different things. It's oftentimes a winning formula for a stock. Does this business pay a dividend? Yes, it does. Annual dividend is $4.70, which equates to a dividend yield of 1.27% of for the dividend yield. So the dividend yield, I'm sure, has gone down as the price of this business has gone up. Again, it went from it had a huge peak in 2021, $577. So it would have been even worse during that time, the dividend yield. But I don't see anything wrong with that. It's something they can maintain. It doesn't seem like it's putting any strain on the business. Dividend payout ratio is 39%. So between 30% and 50% is optimal for that. And we already talked about share buybacks. Yes, they do buy back shares. All right, let's get into some numbers, some financial numbers. And I won't cover this too long, but I do think it's important to do your research on the actual financial metrics of a business. Number one, the more you look at businesses, if you just keep researching different kinds of businesses, from the biggest of the big, the Googles and Apples of the world, all the way down to the smaller, maybe like restaurant businesses like Cheesecake Factory or Bloomin' Brands or Darden, some of the smaller players, you get to really understand an idea of what you can expect a business to be doing revenue wise. You can also see, okay, if a business is, number one, are they increasing revenue? That's number one. You want to see a business increasing their revenue year after year. So if the revenue is decreasing, that's a sign. But you also want to see, like, okay, how big is this revenue increasing year over year? Are they going from 1 billion to 2 billion? Are they going from 2 billion to 5 billion, or 2 billion to 7 billion in 1 year? It's very hard to do big, massive jumps like that. Usually what happens is it's a steady climb. And one thing I noticed about this business is that it's not just flat throughout an entire year. There's usually it's kind of a bell. There's usually a big peak during the summertime, and then it cools off during the winter time. So you can expect most of the sales for this business to happen during the summer, and then the sales kind of drop off into December. But I've got some numbers going back several different years. If you go on the Substack, they're all listed out there on the Substack. But in 2021, they did actually, let's start in 2020. In 2020, they did 3.9 billion. Then it had a huge jump to 5.3 billion. So in 2021, a big spike, which again, that was the height of the COVID era. And then 2022, they did 6.1 billion, and then in 2023 it kind of came back down to earth at 5.5, and it's steadily climbed since then. So I'm not really surprised about that. That seems like it's in line. And I think for a business like this, it's not going to be a smooth ride upward. I think as they open more stores around the world globally, they're just going to continue to sell more products. And then it's really about execution. It's about opening more stores. It's about running the stores well, training the employees, keeping the inventory under control, and just continuing on that playbook so that you can dial it all in. The other thing I kind of like about this business that I was thinking of is that this is a business that is not going to really be disrupted much by artificial intelligence, by AI. So a chatbot or even a robot is not going to really change the purchasing or the building of pools or the maintenance of pools. It would be very hard for, I think, a machine to maintain the quality level that a pool needs to be active, to be I don't know, just to stay nice crystal blue. It's kind of something that human needs to have their eyes on and be able to say, okay, what does this pool need? what products does it need, what would make this look better as far as maybe aesthetics and things like that. So I don't see this business massively being disrupted by AI in the way that maybe like a software business is going to be. It's like you're still going to need humans that are actually going to, number one, build pools, and number two, maintain pools. Like getting leaves or getting debris out of a pool, having a robot do that is going to be a lot harder. You're going to have someone there looking at it, making sure uh, it's, I don't know, that it's staying nice and clean and clear. So okay, let's talk about expenses. Expenses have gone up as they're opening more stores. Not surprising. They're probably having to buy more land, build more stores, have more inventory. So it's gone from 3.4 billion in 2020 to 4.4 billion, 5.1 billion, 4 point, and then it dropped to 4.7 in 2023, and then it's slowly climbed in 2024 and 2025. So expenses are increasing, but the number one thing that I like about this business is the net income. Net income is one of the most important metrics that you can look at. Number one is I would say revenue, net income, and then debt, but definitely net income because that's the actual profit that a business makes off of all the revenue that they spend on this business. The net income is what they bring home and can deliver in they deliver in the form of share buybacks and share dividends. So and then they can pay employees more and reinvest that money back into the business. So 2020 it was 366 million, 2021 was 650, then it goes up to 750, then it drops to 520 million, then it goes back up to 600 million, and year to date it looks like it's about in the 550 range. So we'll see for this year. So what I like is that the trend is moving in the right direction. So it hasn't broken the I kind of separate businesses out in the forms of businesses that have $0 to $500 million in net income, businesses that have 500 to a billion, and then all businesses over $1 billion in net income means it's a big business. It's over a billion. So this is kind of in the middle. They're in the 500 to $1 billion worth of net income. So the best thing about this that I see is that number one, that they are profitable, that they have net income because some businesses don't. Number two, that it's increasing steadily over time. And number three, that it is moving up by a good clip. Like it's not just tiny, maybe $1 million increments. No, they're adding tens of millions of dollars in net income year over year. So it's looking good. uh, I see it moving in the right direction. I have no problems with that. I would say um, total assets, total inventory, total liabilities. Liabilities are increasing as well. So they do have some long term debt and long term expenses. It looks like right now their long term debt is about at $1 billion. So it increased a lot in 2021, and they've steadily been paying down their long term debt. So it looks like during COVID, when interest rates were or bank rates were lower, they took out a lot of debt, and now they've steadily been paying it back. So I don't see a problem with that. I don't see that being a sticking point to anything that's going to drag this business down. So I don't see any problem with that. Um, I would say all of the ratios look good. If you want all of the ratio breakdown that I have, that's on my Substack as well, the Harness Money Substack. So lots of good numbers there, but it's a pretty steady business. There's nothing that's like jumping out at me that screams red flag, or if anything, most of it is a green flag. So um, it looks like also they're steadily increasing their employee count. So like I mentioned, they're a little bit over 6,000 employees right now, and that's increased since in 2020 it was 4,500. So it looks like it's gone up about 1,500 people plus, probably even more now. Um, so that's another thing to keep an eye on. You don't want a business that's over hiring a bunch of people, or that's going to have to lay a bunch of people off because I just don't like to see a giant wave of layoffs, even though it happens a lot in Wall Street. Tends to like when a company comes out and says, "Hey, we're laying off a bunch of people," but it tells me that management didn't really know what they were doing if they overhired a ton of people. And businesses that have a lot of employees, I would say businesses that have a ton of employees, like maybe 50,000 or 100,000 more, 100,000 plus employees, that's a lot. That's a lot of overhead. That means they have to make a lot of revenue year after year in order to pay for all those employees. They're generally not my favorite businesses if they have a ton of employees. That being said, a business like Amazon, Walmart, Costco, those are all employee heavy businesses, but those are some ones that I like and have kind of become essential in the US economy. So um, there's not like one hard, fast rule. You just kind of have to uh, piece it together by um, by how you feel about it, just doing your research. So one of the ones I do like to focus on is dividends per share and the dividend yield. So dividend yield it's actually been decreasing since 2021, but they have steadily increased the dividends that they pay. So the dividends per share has actually been increasing year to year to year. So I do like to see that. I like to see that they are steadily increasing that dividend over time so that you're getting more and more money for holding on to those shares. That's definitely an incentive for me to um, hold on to a stock. If it's paying that dividend and it's consistent, if it was consistent through the COVID downturn, then I'm like, okay. Um, Key business metrics, the one that I found the most interesting was the number of US stores is 392. The number of international stores is only at right now is at 53. So not a massive number of international stores. I definitely think that's an area where they have room to grow on the international front. They've already proven that they can break into different markets like Australia, like Europe, just really pushing the pedal down and opening more stores in those locations where it makes sense. I'm sure they're looking at data on their side of what's the next market that they want to go into. Number one, I like that they still have markets to expand into. And number two, I think they could go deeper into the markets that they already have. If there's 392 stores in the United States, I'm looking at like Canada, Mexico, South America, Europe, Southeast Asia, Australia, those whole parts. There's definitely more stores that they could open in within their network. So, all right, let's get to the really good stuff for this show, and that is my verdict. Let's talk about the verdict. So first, I want to say, let's talk about the potential success. What could go right for this business? They just continuing opening new warehouses, and that just continues to drive sales for this business. We've already talked a little bit about new stores. Number one, as the third world countries come up in the food chain and more people get disposable income, that could be one. I think as social media as social media becomes more and more ingrained in society, more and more people are going to want a lifestyle. A pool is really a signature of wealth, I feel like, in a lot of the United States lexicon. So as more people see and make more money in the United States and around the world, they're going to want more pools. So I just see the demand increasing because it's the demand for luxury I see increasing just because more visibility. You have more insight. Younger people have more insight into luxury goods like LVMH, Hermes, Ferrari, just different of the luxury hotels like Hilton, Marriott, the Ritz Carlton. You have shows like White Lotus that have hit the social mind of consumers, and so they see pools as a luxury. And then also, I feel like the pandemic really did kind of change some people's minds. Like, although we're kind of going back to the way it was pre-pandemic, I think that a lot of people are still looking at lifestyle and think, if I'm going to live out in the suburbs, I want to have that pool that I can live by. Same with businesses. I think if you're a hotel, if you're going to be a luxury hotel, you've got to have a nice pool that's well maintained. If you don't have that, people aren't going to stay at your property. So I think those are all things that are driving the potential success of the business. Also, people's attention to fitness I had on here as well. So I think more gyms and more spas being added in the United States and around the world as people are more focused on staying fit. That includes a pool, so a hot tub, a cold plunge pool, those different types of things. And again, once you add those things, they have to be maintained. So once a spa opens, if it stays open and they have a pool or a spa, that has to be maintained. Another last one I'll put on here for potential success I had on here was climate change. So as the world gets hotter and hotter, pools will become more in demand for it. So potential failure, what could go wrong? The first one I have on here is what could go wrong? Low barriers to entry. So I could see possibly an online player like Home Depot or Lowe's coming in and just trying to undercut this business and sell as much of this type of product as cheaply as possible. So in that regard, there's low barriers to entry. But on the other hand, it's hard to expand to certain international markets. So maybe in the United States there might be lower barriers to entry, but internationally there might be higher barriers to entry. So increased sales competition. So as you have more online retailers and big box retailers, that's just more competition. And then poor management, political regulation on how many pools can be built. Those are just points of failures. There are things to watch out for in this business. But for the most part, I like that this business is laser focused on pools. If they started trying to expand into other areas, other product lines like grocery or something, or clothing, then I would really have an issue with this business. But are there any outside factors that could affect this business? And I would say just war, maybe conflict with China, and just political destabilization in some of the countries that they are operating. But I don't see anything crazy that's going to mark this business or give me real pause that could destroy this business as far as outside factors. All right, my income fit score here. I've got that on my Substack if you want to know how this fits in exactly to my income portfolio. I do think this would be a good fit for an income portfolio that is focused on dividends, increasing dividends, and really about stability. Now, I don't think this fits as well into a growth portfolio. I think it fits better into an income portfolio because it's not blowing the roof off of revenue. It's not going to be a fast growing cloud AI provider like an Oracle or an OpenAI or anything like that. But it's just going to steadily increase its profits over time. I think it will raise its income. It will raise its dividend over time, and I think it's a pretty solid business as far as I don't see the revenue being destroyed anytime soon. There's already so many pools out there that need service, and this business provides a critical lifeline for those particular pools. So I think it would fit well into being a reliable business for an income portfolio. Now, again, it's not going to be, I would put it lower on your priority list because it's more for that steady, reliable income that's going to slowly increase over time. It's not a covered call ETF. It's not a business development corporation or a REIT. So it's not a high yielding dividend player that's going to give you a ton of income. You'd have to have a lot of shares of this business to really make a lot of money from your portfolio. But it will provide stability. It will survive the ups and downs of the market, and it's not going to be completely crushed. I actually think it might be undervalued right now at $8 billion. The value has come down since the COVID highs. So I think it's probably a little bit undervalued at its current price. So if you buy in today, you could be buying uh, a business that's going to uh, increase in share price over time. But again, it's not going to, I don't see it like blowing up the market. It's never going to be the hot stock on the NASDAQ that's going to be talked about like the Mag 7 or like the software stocks that are on the NASDAQ. I think it will just be a reliable player that consistently grows year after year. They're going to open more stores, they're going to increase their revenue, and that is what is going to drive just drive the success of the business. I will say the one other thing that I'm thinking about is the cyclicality of this businesses. So one time it's very adjacent to home building, so you have to be aware of that as well, so that as the if interest rates stay really high, home builders might or homeowners, home builders might find it more expensive to build new pools in their backyard or their neighborhood. So that's just something to keep an eye on. It's kind of adjacent to construction, and I don't really love home building stocks because they're just so up and down. One year they're in favor, one year they're out of favor. It all depends on what the interest rate is. But the reason I kind of like this business is because it caters more towards the wholesale, which is uh, more towards businesses. It has this business angle to it that makes it more reliable. Businesses have to spend the money to attract customers. So, and they usually have money. It's usually an expense that they can write off to maintain a pool. So, in that regard, I do kind of like it. Uh, but like I said, for the most part, it's just going to be steady. I don't see it crushing the market anytime soon. Am I a bull or a bear? I am a bull for this stock. I think it will do well over time. If you hold it in a long term portfolio, it will steadily grow and you will do just fine with this business. So on the rating scale, I rated it a 6 out of 10, which is better. So that's on the plus. That's beyond 5, but it's not an 8 or 9 or 10 just because it's not as fast growing as some other stocks out there. There's some stocks out there that you just look at the numbers and they are just crushing it and growing rather quickly. So it's kind of right in the middle for me. I can see it good for an income. If you need a reliable income stock in your portfolio to diversify your portfolio, this would fit perfectly in there, but it's not going to be a massive grower. It's not going to be a massive dividend payer. But it will provide uh, a lot of reliability and steady income. All right, that's my show for today. So thank you for watching this video. And remember to like and subscribe and sign up for the Harness Money Substack. I give so much great info over there, lots of numbers. A full breakdown with all of my show notes is on the Substack. And yeah, thank you for watching. And remember to make good money choices. Until next time.